Welcome to the Professor Trades channel, and in this video I'm going to share with you how you should trade crude oil this week. I'm going to share the best strategies. I'm going to share some setups to make sure that you are profitable this week. So before we get started on the analysis, it is quiz time. So you can see the question below, and the question is crude oil the most traded commodity in the world? If you think it's true, go down to the comments below and write down true. If you think it's false, write down false. And at the end of today's video, I will be revealing the answer to the question, is crude the most traded commodity in the world? So let's go ahead and start with our analysis, and we will begin here on the monthly chart. Okay, some very interesting things. And I also want you to keep in mind one particular thing here, and that is if you are in a long position right now for crude oil, I would caution you, because what I'm going to show you in this video could reveal that we could see crude oil falling a little bit deeper. So make sure that you watch this entire video so that you can have a plan for any open trades that you may have. And again, at the end of today's video, or by the end of today's video, you're going to have a couple of setups as well. So let's go ahead and jump into the chart here. Okay. And if this is your first time here on this chart, welcome, welcome. If you don't know who I am, my name is Armando, aka the Professor Trades, and I've been teaching college and business courses for over 15 years, and I've been an investor and particularly a trader for over 8 years. And like many of you, I struggled to find my sweet spot for about 3 to 3.5 years. Then I finally got with a community, I got with a mentor, and that changed my trading forever. Eventually turned into a six-figure trader, and now my main purpose is just to be able to give back to folks who are just starting, who are intermediate traders or even advanced traders. And that's why I built a community of international traders so that people can trade together and feel confident about what they are doing. So my plan is very simple for this video and for everyone in our community, is to learn the key zones of every chart, and then for you to feel better about your trading decisions moving forward. Okay, so let's go ahead and jump into the monthly chart here. So as you can see here, we are still currently, obviously, in the month of July 2024. So one of the things that stands out for me right now on the monthly is that we are beginning to trap price. So if we look at this monthly level right here, okay, we can see that price here has still been trending up. And then when we go here to the downside, we can see that we've had a hit of that trend line now on 3 particular cases. So one of the biggest questions on the monthly chart is going to be, and again, we've got about 10 days or so left in the month. How far down will crude oil go, or will we see any more retracements? Okay, and I think the magic level for crude oil could be somewhere right in here as we progress through the charts. Okay, so you can see here in the monthly that we have kind of price trapped in between these levels, and that's super, super important on a bigger time frame to understand that as we move forward. Okay, so what I want to do now is jump over into the weekly chart and show you this from a weekly perspective. Okay, so now that we begin to look at this weekly chart, we're going to go ahead and bring up our levels right here. And this is where now you can just kind of make a couple of quick adjustments. Okay, so that way you can, validate your stance. And then again, we can make a couple of minor tweaks here, even though we're pretty much on point with this bottom right in here. Okay, and now again, grabbing our hourglass here, we can begin to see that on the last particular week of crude oil, we did break a very important structure, and we're going to be looking at the Fibonacci levels right in here. But based on this price action, it looks like we will be coming down to some of these liquidity levels down at 76 or 74, or a possible retest of this trend line, which is at about $72 a barrel, again on this particular chart. So again, just a quick reminder that if you are using another platform, if you're using a futures platform like I do with Thinkorswim, for example, and I also trade crude oil on the Forex side as well, make sure that you are looking at your platform because pricing will be different. But what should not be different is the price action that you're seeing here on your screen. Should be very, very little difference, if any at all, okay, across the platforms, because price action should be the same unless there's some type of manipulation happening with your particular platform. So you always want to verify, okay, that you're seeing the exact same price action that we are seeing on our charts. So let's go ahead and jump back into our weekly. Let me move this up a little bit. Okay, let's back into our weekly charts here real quick. And again, this is probably what we're looking for a target here. So what I want to do now is I want to go ahead and take a look at this Fibonacci level from a weekly perspective, just to give us an idea where we are at. So I'm going to go ahead and swing it up to that swing high, and we are going to expand the parameters here. So you can see here that on the weekly, okay, we are right at this 50% level right here. But again, what's more important is that we did have a structure break right here when price collapsed under 81.25. And so that structure break, again, indicates to me, right, that we could see possible lower prices. We might see a retracement, but again, I'm expecting price to drop lower as we move into the analysis. Okay, so on a bigger time frame, and again, this is important for everyone to remember, this is where the larger institutions are trading. Okay, we are considered retail traders, and so we're looking either to scalp or to have some swing opportunities. But I always caution folks, you have to be looking at the monthly, you have to be looking at the weekly charts to get a perspective of this institutional money that's moving the markets, trillions of dollars each and every day. It's not happening on a 15-minute chart. It begins on a small chart, but again, you have to see the bigger price movements and the price action on the higher time frame. Okay, so as we begin to develop a game plan here, we want to be able to look at what's happening across all the different levels as well. Okay, so the first thing we want to do is we want to head now back into our charts, and then what I want to do is I want to leave that fib level there for now, and I want to jump over to the daily time frame, because I like to show as we progress so that you also learn on this channel what happened and how price action is beginning to develop on the higher time frames. Okay, so now that we have this fib level here, again, you can see what price action happened. And as I remove this fib level, and those folks in our trading community know that we like to trade our break of structure all the time. So we had actually our first entry was up here. And then what happened was when we sold here, price came back to retest. And then that was our second entry there. So in essence, our members have been taught that we're trading all these different breaks of structure to the downside. So again, I encourage you, if you get an opportunity, to definitely come and trade with us in our community. You'll be surprised what we're doing. We're doing some amazing things, over 2,000 pips last week inside of our club. So again, I encourage you at some point, if you want to go ahead and visit theprofessortrades.com, check out what we are doing. Come in for less than $1 a day, and I can guarantee you that you're going to find some amazing people, some amazing traders, because I'm not the community. It's really about everyone else, but I'm providing you analysis daily, twice a day, charts, chats, and so we're going to keep you abreast of the situation. Okay, so now we're looking here at this price action. Okay, and again, we can see here on a daily that we did have a break of structure there that we just talked about before on the higher time frame. Okay, so as we kind of move up here with crude oil, the first thing to me that stands out are two things. Number one, we still have some unmet liquidity here at about 76.50, and we still have some unmet liquidity down in these two candles, which again would bring us to the possibility of crude oil coming right back down to retest this particular area at somewhere around 74 to 75 price range. Okay, we would have to break that level if we expect to go lower, okay, on crude oil. So as we look at this price action here on the daily time frame, again, just kind of another, reminder here that if you are sitting in a long position now, you may want to have a plan to either hedge your trade or exit your trade, because it looks, based on price action, that yes, we may, of course, as always, have some type of retracement, but on the bigger scale, it is looking like crude oil is going to fall a little bit deeper in price over the next coming week or so. Okay, so what I want to do now is I want to be able to start giving you levels on these higher time frames. This is going to be super, super important for you to have. And again, I like to have these levels on a bigger time frame. So let's go ahead and create these levels based on just some of the key zones that just kind of stand out based on support and resistance. Again, you can look at a floor here, you can look at a roof here, and then we will adjust these as we kind of move forward. And I'm only concerned right now with the immediate time frame that we're in. I'm looking for wick rejections on multiple levels, so we understand that we may or may not see price respond in that particular area right in here. So we're going to kind of start with these levels right in here. So again, we kind of are in a pretty crucial level on this daily time frame. So now we will adjust as we drop a little bit lower into our 8-hour time frame. We can see here that we had, multiple rejection points at the top, and we also had a nice area of support there. Okay, we will also move this a little bit down or a little bit up right in here. So again, this level right here that we are at is going to be crucial to what kind of happens with crude oil, whether we're going to see some type of retracement, okay, and then a possible continuation back down. And I'm going to show you why that may happen, and it's because of this candle here in just a little bit as we go deeper into the analysis. So I'm going to go ahead and get rid of these circles for now, because we identified those on the higher time frame as possible liquidity zones. So what you kind of could be doing or should be doing at this point is, if you need to, head over into your actual crude oil chart, pause this video, and go ahead and mark these levels down on your charts based on this similar price action. Again, don't be concerned about the price that's showing on your platform, because prices will be different on every platform. Okay, every broker establishes their price. They may be off by a few pennies, they may be off by 30, 40 cents, but what you want to focus in on is that price action. So if you need to, pause this video and go ahead and mark up these levels so you have them for the rest of the beginning of the trading week. Now, again, if you are in the trading club, you do not need to sweat or worry or move a finger, because as you know, I provide all these charts to you on a constant basis. Okay, so we are now going to be at this level here, and we are going to drop into our 4-hour time frame. So we begin to see the price action that is beginning to happen. Okay, so the reason why I say that we may see some type of retracement at this level right in here, and remember that zones, okay, are never an exact line, they're an area. Okay, so I always like to put it kind of right in the middle. Now, the reason why I'm saying we might see some type of retracement first is because this candle right here, which was a drastic movement down, okay, that was a lot of sellers and money flushed into the market, which moved the market, 212 pips on one 4-hour candle. There is going to be a lot of liquidity sitting in this candle right in here. Okay, now if we kind of zoom in here and we kind of take a look at this particular section right here, we can begin to see, right, that we are at this level here. Now we are going to expect this liquidity in here at some point to be met. Okay, doesn't mean it's going to be right now, but they will come back up to grab that liquidity that is sitting right in there. The exact same way they came back to grab the liquidity that was sitting in this candle when price took off. Okay, you can definitely see that particular liquidity. They came back to grab all their money. That's called institutional money. So as we begin to develop this game plan, this is going to be a very, very important level to see what happens with crude oil. So now that we are on a 4-hour chart, I'm going to mark up what I consider to be an intermediate level. If you look over to the left, you can see floor, you can see resistance, you can see floor. So we are going to mark this 77.21 as our next possible target. Okay, once we break and close below this current area, we could see price coming back down to this level. Now, we did see right here that on several occasions price came and bounced off that level, which is about a 40-cent difference. So, we can keep that level there, and I'll actually make this an entire level just so you can see that you may have a bounce there and it may not reach as far down as 77.21. So as we look at the price action here, this is going to be a key marker as to what is going to happen at this level. We are either going to get that bounce from somewhere around here to grab liquidity. And then again, there is no secret that at this point, crude oil is bearish and you should only be looking for selling opportunities. I would not be looking for a buying opportunity based on the structure. We've already broken structure A and we're currently at structure B. So if you are going to buy from this particular area, it is to me a little bit riskier because we can't anticipate how far up they will go down for liquidity. The best thing to do is to wait for the next best sell opportunity on this higher time frame. And that would be by drawing a Fibonacci to this level, marking up our zero line here, assuming that's the low. And let's turn this fib white. And then we're looking right here at the 61.8, which would be the liquidity level as well. So you can see how these kind of match up, that if they do work out this way, this is the best opportunity to sell because your risk becomes a lot smaller because you would be looking at something like this on some type of a short position where you would get out above this high, and the goal would be to come all the way back down to the negative 27 line and break a structure or even lower, right? And again, one of the things that we talk about, in our group over and over is the fact that we have to secure profits along the way. Don't let winners turn into losers. What do I mean by that is we practice a lot of 2 entries per every trade that we get into. So example, even if your risk was 2% a trade, instead of entering 1 trade at 2%, you would enter 2 trades at 1%. Okay. That way you have 2 movements happening. And the goal is to secure at least 20 pips or 20 ticks on that first entry, right? And then let the second one run as far as it can run, protecting your trade by moving your stop loss into profit, maybe enough to cover your fees if you have a few pips or ticks into profit. So even that one would still give you some type of gain. And then eventually what happens with that method is that we have a runner that goes 100, 200 pips, and you'll be actually grabbing more than your intended percentage when you first entered the trade, but your risk has been eliminated. So if you want to find out more information how to do that, definitely we talk about that inside the club over and over and give you ways to structure your trade as well. Okay. Hey, by the way, if you are getting some value on this video, I would appreciate you to hit the like button. That would help me share this video with more people. Share it with others, and definitely subscribe if you are brand new here, and turn on your notifications bell. Okay, so this is going to be the first kind of price action that we are looking for. And again, this is only going to happen, okay, if we get that retracement. So for this to happen here, and let me get a call out button here, right? We need to see this retracement, okay? That is going to happen if we get this retracement to happen back up to this area. Okay, so we need to see the retracement back up to this area. Now, if we do not get that retracement, then what we're looking for is what I would say an impulsive move down. And again, well, the interesting thing here is going to be that today is Sunday, and so there is probably going to be a market gap, right? So we have to let the market settle between Sunday and Monday. So understand that by giving you this video today, you may come back and watch this video later in the week. If these things have not yet played out, then they will stay active until the rule has been broken. Okay, so as we go into the analysis now and we look at this, what we're going to look for here is possibly an impulsive trade. Okay. And what I mean by impulsive trade is we can see over here that we've had several impulses down, and this would be probably about 40 pips. Okay, actually 83 pips down. So the impulsive trade here would be that we take a short position on an impulse right below this area here. We close it up above this high, and then we take it back as far down as possible. Okay, definitely your first stop would need to be this area right in here, just because we've had prior resistance levels there. And I like to turn these blue in my chart as a target area because that's what my members are accustomed to. Okay, so this would be what we call like an impulsive trade. So what I'm going to do is put a call out, and this would be here, impulsive on the break. Okay, so because there is such a small gap right here, as you can see. Okay, when I say it's 80 pips, it's not that small, but because there's a smaller area to work with here, if you're waiting for the retest, it may not happen. Okay, so I'd rather you trade for the impulse with the proper lot sizing, and even if it retests, it will give you an opportunity to enter a second trade. Or if you're using the two entry approach, secure the first one on the first impulse, and then manage your trade after that and look for another opportunity as you enter the market. Okay, so we are going to be looking for this price action to happen. Now, as we drop down into the 1 hour, what I do want to do here is close this real quick and let you understand that because the market closed right in here, I'm going to go ahead and just put a call out real quick right here. This is going to be the gap, meaning this is where price closed on Friday. Okay, so let me kind of real quick kind of explain the gap to you. And again, you may have heard this before if you've been on my channel for a while. And gaps are created when a price closes at one price and then reopens at another. So on Sundays, we usually have some type of gap in crude oil. We have strategies and rules for when we take a gap inside the club. We trade live at 6 p.m. Eastern Standard Time when the market's open for crude oil. And then we look for at least usually a 40 to 50 point gap, or that price opens even like a 10-point gap, but then runs away from that gap for the first 30 minutes to hour or two. And if it creates that 40 to 50-point gap, then we trade it together. And we talk about this on the live analysis, but not just for crude oil, for all the indices as well. So again, just another invitation for you to come out and check out what we are doing live every day in your own private app, which actually works on your desktop, laptop, or any smart device, including Android and iOS. So this will be the gap area that we will be looking at. So as we kind of go back into this 4 hour, right now, at least we have a plan about what we can or cannot do based on price. For me, particularly at this point, I am not a buyer of crude oil. I only want to look for opportunities to sell crude oil at the different levels because structure kind of has been broken already. And so when structure is broken, it's very important to kind of remember that and stay with the trend is always much, much easier. Do we take some counter trends? Absolutely. But we take them on small levels and we drop all the way down, to example, to a 15-minute chart. And then we're looking for the price action to give us that, right? We were selling all these levels up here based on the price action with nothing more than just a structure break that we give you as you enter our group, and we're updated all the time. So I hope you got some value on this video. Again, if you did, hit that like button for me. There's going to be a video popping up here in one of these two corners or on your screen here in just a few seconds. I did an entire training for our members on crude oil structure breaks. Watch that video. It is going to drastically help you trade crude oil so that you can be successful, right? And again, don't market success by how much money you make. Market success by how you grow your account over time, because a lot of people that start this journey do not end this journey because they have quick and fast success. And that leads usually to people getting overconfident, over trading, and then you don't know what happened to them. And why? Because they've blown their accounts over and over. I've been on this journey now for 8 years because even though I struggled for the first 3.5 years of my journey, I finally figured it out. I got into a community, I got around the right people, and we traded conservatively, growing accounts over time. And so to help you and to entice you even further to see what we are doing when you first get started, I give you a 20 pip challenge. I help you get 20 pips or more every day on the markets. That being said, this growth chart that I will share with you will also have a plan for you. It will automatically calculate how much money you should be making per day based on your starting balance. So it's going to give you a roadmap and a plan, because most traders fail because they have no plan. And if you have no plan, then you have to plan to fail. Okay, that's it for today's video. Hope you got some massive value. If you're in the club, I'll see you for the live analysis. And if not, think about it. And if not, enjoy your experience here on YouTube, where I hope to give you as much value as possible. And if you have not yet subscribed to this channel, please do so. I'm not getting any younger, now at 54. I would love to see 50K subscribers here, hopefully within the next 6 months or so you can help me reach my personal goal. And that doesn't cost you any money. It's just hitting a button to hit subscribe. And if you want to be notified, then make sure you hit that notifications bell so that you can be notified when I produce these videos. And now I'm officially getting back into YouTube Shorts to give you quick, small trades, tips, ideas, and quizzes to help you on your journey as a successful trader. Thanks for watching.